You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIKes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are rolling into our final program of our broadcast week, at least for all of you on-demand folks. All you Secret Club kids, you get one more show after this coming up a little bit later today. Of course, it is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the fine network upon which so many of you have been draining us dry on the bandwidth side. You know what? Don't worry. There's more where that came from. So have at it. Enjoy all the shows whenever you want on demand. Of course, if you want to join us live there in the Secret Club, you want to get access to our cool giveaways, one of which may be coming up in a few minutes, as well as, of course, get access to all of our exclusive shows and everything else. theoptionsinsider.com/secret club. And of course, however you listen, we do love to hear from you folks. So send in those questions, those comments. If you're on the on-demand side, you like what you hear, we'd appreciate a little bit of a rating, a review there, wherever you get the show on whatever platform it is. It does help the new folks continue to discover the show out there. Let's see who we're discovering on the volatility front today. Who is joining us to break down the mad week of volatility we have in store for us this week is none other than the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program. How goes your Volatility Fool's Day, sir?
Happy April Fool's Day. We got a lot to unpack in the volatility space today. I'm excited.
Has anyone played any mean tricks on you yet so far today?
No, nothing so mean yet. No mean tricks. So just lots and lots of happiness. I don't know. But yeah, happy April Fool's Day. But, who's not a fool is all the amazing new vol products that we're going to get to unpack and what's going on in VIX and VIX futures. There's just so much to talk about today. I'm excited that we don't have a guest or anything like that, so that you and I can just really dig in.
We can dig in. And before we get to that, I said it's Volatility Fool's Day. People usually play tricks. We're not going to play a trick. We're going to do the opposite. We're going to give our audience a gift, in particular all those cool folks hanging out there in the Secret Club, because it is that time, listeners. March has drawn to a close. That means it is time to choose the winner of our Pro Trading Crate for the month of March. Remember, you have to be in the secret club to be eligible for this drawing. Looking at a whole mountain of cool stuff here. You're going to get a good swath of it. You're also going to get choose your educational product of choice. Maybe it'll be Mark's book. We have a bunch of offerings on the educational side. We'll also get your shirt size for some custom options, insider gear. The rest is up to us. It's all bespoke. Each crate is one of a kind, and they're all, if I do say so myself, pretty darn cool. We usually do this on the option block. Thought we mix it up. We'll do it today on Vol Views because why not, as they say. All right, so Mr. Meatball, I'm going to fire up the random number generator, which corresponds to all the different member numbers we have here. When you are ready, when the spirit tells you, you just tell me stop, and I will pause it, and that will be the winner. All right, so are you ready to go?
I'm ready to go.
All right, so I will hit it. All right, now the numbers are flashing before me. I have no other control over this, listeners. Mark will tell me when to hit the stop button, and I will do so. So whenever you want, Mr. Meatball.
Okay. Stop.
Okay, perfect. All right, so that, all right, let's see. And who does that correspond to? Oh, that I do believe is the age of Delaquarius, who's always in our chat. Of course, he's not in there today. I don't see him in there today. We'll have to send him something on Twitter. He was just agitating last month. He's like, why didn't I win? So there you go. Age, you did win. Mr. Age of Delaquarius, you will be contacted by our producers post haste, even before the end of the show, to get your shirt size and your choice there for your educational item. We have a whole rash of awesome options and trading and financial educational stuff to choose from. And then we'll put together a whole bunch of other fun stuff, and it'll be heading your way post haste. Congratulations, everyone else. Well done. If you want to participate in next month's drawing, listeners, get in there now, theoptionsinsider.com/secret club. Meanwhile, we got to get going. It is time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was and indeed still is, from about trading and trending and analysis and unusual activity, all sorts of fun perspectives. And coming into showtime, you are seeing the markets. Usually this time of the week, they're either green, I should say, or they're kind of mixed. Right now, they're decidedly red, even though I'm not blowing our skirts up to the dark side. The Dow off about 0.25%. S&P off, closing in on 0.5%, not quite there, almost 0.45%. And the NASDAQ off about 0.6%. So decidedly red, but nothing to write home about out there. That means vol coming into the start of the show is kind of a mixed bag for the most part. It's mostly down, but not even down as much as it was, let's say, earlier in the session today. So like right now, spikes when we kicked off the show, it's at about 21.25. It puts it down a little over 1.5 points, about 1.6 points from where it was this time last week. So all of you who in the crystal ball who had slightly down, maybe, might be looking good by the end of the show. We shall see. Of course, an hour is an eternity in this market, listeners. VIX cash, when we kicked off the show, right around 20.75. It puts it down about 1.5 points from where it was this time last week. Our old friend VVIX at about a 112. It puts it up about 2.5 points. So ticking up a little bit, but nothing crazy out there. Same story for our old friend, the Viking. I should say really our newer friend, the Viking, a.k.a. V-Spikes, a.k.a. VSPKE. Look for that in your platform of choice. It's about a 138, almost in a half, but 138.4 puts it up almost 5.5 points from where it was this time last week. So the Viking ticking up a wee bit this week as well. And come into showtime, our old friend, the crappiest indicator out there, the skew index, almost a 141, about 140.75, puts it up almost 2.5 points from where it was this time last week. So it's starting to get in skew index parlance, starting to get a little bit top heavy. When it gets up to about 150, 155, that's when people usually start to sit up and take notice out there in skew land. All right, a lot to unpack, Mr. Meatball. Let's start with the week that was from a vol perspective. Then if you want, after that, we can get into all the new product fun, sir.
Yeah, well, the VIX started the week getting clobbered and has spent the rest of the week kind of slowly grinding back. The market has been essentially down, this will be the fourth day in a row that we've kind of fallen apart. Third day in a row. We had a real strong couple of days, we got really, really frothy on the 29th and have since really given it back. We're all the way down back to 4,500, might break that level today. And with that, we've got the VIX was briefly even down to the 18s. It's now back at 2069 as we're discussing, and moving a little bit higher. Obviously, we're heading into a weekend, but setting up to be right around, 21, 22 come Monday. I'm looking for potentially we could see some selling into the afternoon. The vol definitely seems a little juicier today. So I am very interested to see what this close looks like on a Friday. I don't know. There are a lot of great reasons to go out long. So I'm looking for VIX to maybe make a run at 21 this afternoon.
All the way up to 21, the epic levels of 21. Well, I know you've been talking for a little while, Mr. Meatball, about this kind of rash of new products. Mr. Rock Lobster mentioned them last week as well. If you're not familiar with what we're talking about, listeners, these are effectively the new flavor of XIV, which, of course, died back in 2018 and that was approved back in October of last year. And we were all kind of excited. We're like, okay, they finally came to a conclusion. I didn't think we'd ever see really an inverse product, at least not for quite some time. And they got it approved last October, and yet we haven't really heard hide nor hear of it since.
So on Wednesday, they listed UVIX and SVIX. And then yesterday, they began listing the options. Now, the volume on these has not been, ridiculous, but for what you can expect out of volatility, for what you should expect out of a brand new ETF, the volume's actually been pretty good. UVIX today is already trading. It's already traded 170,000 shares. It's been averaging about 300,000 a day. And yesterday traded over 1,500 contracts, which is pretty impressive. SVIX, pretty similar. On the day, already 300,000 shares have traded. The options volume has not quite gotten there yet, but I think it will. Today, nothing really lighting it up, but both of these products are, I would say if you're VS Trust, if you're the launcher of these things, you got to be happy with the starting volume. A couple 300,000 a day for a brand new product. I think that's pretty darn good. And I think you're going to see some real interest in this, especially UVIX. People have been kind of clamoring for that double long ETF for some time, and we finally got it. So I think that this is a really exciting time for vol traders, because we've got two products that have been kind of missing from the our quiver back, and the fact that we have an XIV that is now an XIV clone that is optionable. I think that's exciting, and I think that's going to lead to some good trading. And UVIX, again, gonna be busy. It's old UVXY now, and I think that's going to be a fun one to trade.
It's funny because when these were approved back in October, they really got a lot of attention, a lot of fanfare. It seems like they launched with a bit of a whimper, not as much interest. Maybe it was just other things going on that stole the thunder, Mr. Meatball. But have you had a chance to trade these? What are your early impressions?
Yeah, I have. They're doing what they're supposed to do. You're seeing UVIX move twice that of, VXX is still broken. There's some news on there that we can hit at next. But, VIXY, which is a VXX clone, it's doing 2x that. The option volume has been good. The implied volatility, the markets are still wide. But if you look at the midpoint, it's right in line with where implied volatility should be on the product. It's not too high, not too low. So they've got these things pretty well priced. And if as volume increases, there's going to be a lot of opportunity to trade options around this.
Well, I know a lot of people in our audience have been waiting for a return of XIV, I should say. That brings you to the SVIX. They do claim, and I mentioned when they got approved, I said once these products are listed, I do want to get the volatility shares folks on the show so we can hear from them directly about how they think they're going to avoid the pitfalls that obviously undid its predecessor out there. So I think now that they are listed, we shall go out and check these out, listeners. But yeah, you have the SVIX, which is, of course, your new flavor of XIV, and we have your UVIX, which is effectively your double long VIX. So two interesting funds. We have been waiting for these for a while. And it is, you're right, Mr. Meatball, it is kind of interesting timing to launch these this week. In fact, we have a poll up right now that is about all the problems we've seen with volatility products like this, these Franken products. And I use that in the most charitable nature of the term because we have seen a lot of these products crash and burn. So our poll question of the week right now is, the recent VXX drama has focused the spotlight back on volatility product meltdowns. Though we thought we'd ask you which vol product or implosion or failure or just drama has had the greatest impact on the overall vol market. The great SVXY neutering of 2018, the death of XIV also in 2018, the TVIX unwinding / disaster, call it what you will, of 2012, or the current ongoing drama with VXX. And I will reveal the results a little bit later in the show, listeners. It's interesting stuff here. But it is, I think, maybe inauspicious time to launch a new vol product on the leverage side, particularly right now, Mr. Meatball, given what we're seeing in VXX.
I thought it was interesting that was the timing. I don't know if it had anything to do with it, but definitely an excellent time to enter the space. I'm really glad that, vol, obviously it would have been kind of fun if they had these, when VIX was 30.
The short VIX a little less sexy now, but it's still interesting.
Yeah, absolutely. VIX is still in the 20s, so it's not like we're dealing with a VIX at 13. I think there's going to be a lot of action with these. You're seeing a lot of volume around these already. And so, yeah, I think they're going to be, I would say my feeling right now is, Mark, maybe you feel differently. I don't think 300,000 shares a day for a brand new ETF is bad, especially in the vol space. I think that's pretty good. You got to think they're happy. Yes?
I would have to imagine. Like I said, it is somewhat inauspicious time. People are taking a second look at the whole vol ETP space right now. Given what's going on, they're a little bit more leery to dive into these products. So given all of that context, yeah, I think that's a pretty impressive number. And also to get the options listed that quickly. It used to take at least a couple of weeks. Now we're seeing turnarounds in days, if not effectively 24 hours.
I was shocked these were listed the next day. I was expecting them maybe next week or the following week. But the fact they got the options listed the next day, absolutely exciting and astounding.
If you had told me on last week's show that we would not only, with the products we listed, I maybe would have said, okay. If you had said we would have options on these things too by our next show, I would have said you were a crazy person.
Yeah, me too. But it happened. So, good job to the volatility shares guys getting these things out. Because I did not think they were going to be able to do it that quickly, but they did. And there's just some really, I think there's going to be really good trading around it. I'm excited.
Yeah, I want to see if our audience is excited. Maybe we'll do a flash poll, or maybe we'll save it for our big question of the week next week. We'll see. But we'll do something along these lines to gauge your interest. Are you guys interested? I want to know the Secret Club chat, too. You guys are kind of the bleeding edge of all things vol. You guys intrigued by these products? People have been waiting for a long time. The SVIX one is particularly controversial. There are a lot of people, even on this network, who have come out, who are very seasoned professionals in the space, who have been trading for a long time, who have been involved in these markets for a long time, who think a product like that has no business existing. Like, it's just nothing but danger, does nothing but damage to the market, and just it lures in people who have no idea what they're buying, and then they end up, the proverbial grandmother from Iowa ends up buying XIV right before it melts down in 2018. Or even worse, they try to buy and hold these things because they have no idea what they have. So yeah, there's still a lot of diversity of opinion. I do want to get the pulse of our audience on this because I think it might be a little bit more split than people might think. It won't be all, oh, yay, XIV is back. It's going to be, oh, I don't know if those things should be back. In fact, Brian, our host on OPR, he has been decidedly negative. He thinks these things should not exist. And he works for a broker, where the broker wants a lot of new products. They saw what happened to people the last time with a lot of their customers and clients, and they don't want that happening again. So yeah, there are a lot of serious people out there who do not think these products should ever exist again, which is interesting. So we are living in interesting times, as they say, listeners. Let's keep rolling out there now. Let's get on out to the land of the futures. And we're going to play, I think, with the format a little bit today, listeners, because there is so much weird stuff afoot out there right now. In fact, before we keep rolling on, really quickly, let me hit on these, because it is April Fool's Day. That means it's the end of a quarter, the end of our first quarter here in this mad, insane year where we saw a whole bunch of craziness popping off. We saw the pandemic kind of rallying and then kind of fading, hopefully. And then we saw an invasion in the middle of the quarter and a whole bunch of other fun things popping off, the Fed. So how did that impact everything overall? We got some numbers now for the quarter. Overall, if you're wondering, the best performing sector of the quarter, I don't think that's a surprise, is energy, up nearly 38%. It's their largest overall quarter ever, by the way. The worst performing sector, communication services. The best performing single stock in the S&P, again, not a surprise, Occidental Petroleum, up 95.7%. They were in our most actives a lot over the last month or so on the odd block, or I should say the option block. So not a surprise. They're the worst performing S&P stock. My favorite, EPAM Systems, can't get enough of them, off 55.6%. Best performing Dow stock, Chevron, again, no surprise, they're up about 39%. Worst performing Dow stock, Home Depot, that's interesting, off about 28%. The best market worldwide, Brazil, up about 35%. Worst market worldwide, I don't think this one's a surprise either, Russia, off 78, almost 79%. Best performing commodity, this is interesting. I would have thought something else, but they say diesel, up 67.4%. There could have been a lot of contenders for that, obviously. Nat gas was on a rampage for a while there. Of course, WTI and crude oil in general. Heating oil moved a lot. Lumber rallied a lot, but then it kind of sold off towards the end, so that could have hurt it. The worst performing commodity is coffee, only off 4.5%. That's not a lot at all. Let's see, the aggregate bond index for Barclays off 6%. 10-year treasury yield up 0.828 percentage points, and they even include the VIX here as a percent of a percent. So why not? VIX up 12.3%. Gold up 6.7%. WTI up exactly a third, 33.3%, and the good old dollar up about 2.5%. So, Mr. Meatball, certainly an intriguing quarter. Any highlights that stand out from you in this mad quarter, sir?
I mean, obviously, we've got just a really awful quarter for the S&P 500. Vol went in near 40 before it pulled back. Just lots of worries about the Fed, lots of stuff. And then we also had this VXX disaster, which if you're a vol trader, that was probably the most interesting piece, was VXX completely breaking. Mostly because Barclays is, well, not good at managing their risk and oversubscribed VXX by, what did we say, $15 billion, Mark?
Yeah, they were licensed to issue, I think, $20.8 billion worth of notes. They ended up doing another 15.2, something along those lines. So a substantial portion more. Yeah.
Absolutely bananas.
All sorts of crazy stuff. We'll get to VXX in a second. Let's keep rolling here through some of our other products here really quick. Let's get to the futures because there's some interesting stuff afoot. I have said it many times. If you have a question about volatility, the answer is probably lurking somewhere there in that vol surface. You just have to find it. And coming into today's show, we were saying for a while, when would that backwardation end? And it ended a little bit ago, and we're still seeing that kind of reflected out there in that front portion of that curve. Getting even less juicy this week, even though not a ton. When we kicked off the show, that April future down almost a full point, about 0.9 points from where it was this time last week. And the May future down a little over a half a point, about 0.6 points. So that front portion of that curve continuing to come down, but not a huge evolution out there. Mr. Meatball, anything surprising you in the land of the volatility surface this week, sir?
We saw volatility, the curve really wide spread between the cash index and that front month future as we were bottoming out. That was maybe a sign that things had gone a little too far. VIX got down to about 1890, and that front month future was still trading near 22, a big 3-point premium. As we've sold off and the market has rallied a bit, or vol has rallied a bit, that spread has shrunk, gotten more normal, still a little wide. The front end of the curve is nice and steep as you'd expect. Back end of the curve still really flat. So it is just a very, it's a curve that is still in flux. My light still says, hey, we're kind of red, but that is what I'm looking at.
I'm looking here. Actually, I just noticed the hashtag options trading is trending today for some reason. I don't know why. Usually it's not a good thing. So I'll have to dig in. Maybe our producers can find out why hashtag options trading is trending right now as we speak. Again, maybe something usually negative is happening when that sort of stuff is trending. Getting on out to VIX. Actually, get to spikes options first. Not a heck of a lot lighting it up in spikes since our last show. Remember the big trade recently was that 4-way they put on and very intelligently took it off when things got a little bit higher. We can't really say the same for the people out there in VIX. We'll get that to us in a second. So they had that 4-way bias to the upside. They took it off when spikes was higher, as you're wont to do with those types of trades, and they're kind of waiting to reposition back out there. So good on them, I suppose, for getting while the getting was good. Getting out to VIX options, not a heck of a lot lighting it up out there today. In fact, I think we'll suspend our traditional looking at the whole week of trades kind of format, because we have some other stuff to hit on today as well. I also want to get some more of you folks on the show. We've been neglecting you folks of late, and I feel bad about that. We've been so jam-packed with guests and topics and everything else popping off that your questions have kind of fallen by the wayside. So I want to make sure you get you folks on the show today. But not a lot lighting it up in VIX land today. We're seeing a little bit better in terms of ADV, though. That ADV has kind of been eroding for a while. It broke through 600K, got down to around 550, a little bit lower. It has rallied a little bit this week. It was a little bit north. It was 570 on our show last week, and a little bit higher than that coming into today's show. So trending in the right direction, at least from that perspective. Well, let's break down the top 10 out there, the size positions out there in VIX land. And I use size in air quotes because it does kind of swing from not much at the bottom, only cost you 108,000 to break into the top 10. By the way, it's 80-20 calls over puts out there right now in the top 10 in VIX. That's a huge swing. It was pretty much, for a long time, mostly puts, right? It was the other way, 80-20, 90-10 puts over calls. Then we started to see the calls start percolating in there. When things got juicy, we saw 50-50, maybe 60-40 for the calls. But VIX is normally a call-dominated product. And right now, at least, we have a lot of calls back up there in the top 10. Read into that what you will, listeners, including some interesting strikes. But again, it only cost you 108,000 to break into the top 10 today. That's actually a tie. So technically 10 and 9 are both at 108,000. Number 10, we got the May 30 calls with 108,000. Number 9 also at 108,000 are the April 25s. In fact, we have a couple of ties. We have some ties coming up with some other products as well, but a few ties going on out there on vol views today. Number 8, we have 109,000. You're just barely managing to eke it out of one of those fun strikes I mentioned earlier, the May 75s. Number 7, we got $1.15 of the April 25 puts. So getting back into a little bit of not even downside anymore. Those are clearly in the money puts now. Number 6, 131,000 of the June 70s. So back up to the fun upside. Number 5, $1.38 of the May 35 calls. Interesting to see these, shall I say, more relevant call strikes starting to percolate back in. For a long time, the only calls we saw trading for size were the 75s and all that crazy nonsense north of that. And nice to see some more relevant strikes. The May 35s, number 5, 138,000. Number 4, that's earlier sibling, the April 35s, 148,000 of those. Number 3, $1.62 of the April 20 puts. That's the kind of paper we're used to seeing out there, listener. A lot of those 20s, 18, 19 puts, all that kind of stuff. Not so much this week. Number 2, yes, I said number 2. Something has managed to usurp it. Number 2 are the OX75s. Pretty much exactly 250,000 of those open. Those have been dominating the tape for quite some time. I kind of wonder if the person who put that on, that 1x5, may be regretting a little bit now not taking off at least some of it. Obviously, they have other positions against it that are probably doing all right now. But still, usually when things start to percolate and you have a hedge on, you maybe want to do a little bit of, so maybe you pare it down a little bit. You could go down to 200,000. But no, they did not. And so they are now number 2. They have been usurped. What has usurped them? 302,000 contracts for number 1. That is the April 30 call. So we're starting to see, listeners, dare I say it, relevant call strikes percolating in to the top 10, and a fair number of them as well. April 35s, May 35s, April 30s, April 25s, May 30s. These are not strikes we've been talking about a lot lately. So that, to me, in and of itself, is kind of interesting. I should note, too, if we expand it down maybe to, let's say, maybe 18 or 15 or so, that would get us to the October 150s, because there are 41,000 of those open right now, lest you think It's all relevant strikes out there. So, Mr. Meatball, any thoughts on the fact that we're seeing some more of these, dare I say it, relevant strikes? The 25s, the 30s, the 35s start making their way into the top 10 again. We haven't seen these in a little while.
No, I think it just shows you that now people are feeling a little more comfortable about starting to hedge again. We're seeing a lot of traders step in. We did see huge volume on the April 30s earlier in the week. Lots and lots of trading. And call buying is a good thing if you're bull. Then if traders are buying VIX calls to hedge, that's not necessarily bearish. So I don't hate the idea.
Speaking of buying calls, I have to pick your brain on these because we were joking last week. I think they were the June 110s, or maybe they were the 120s that traded 20,000 times, somewhere along those lines, for like 18 cents, somewhere along those lines. We were joking about how absurd those are. And obviously on the surface, they are absurd, and the 150s are even more absurd. But also when people think about these strikes, they think about getting to that strike. But the reality, of course, you don't have to get to that strike. You don't even really have to get close for those strikes to start to pop a little bit. We were talking about this a little bit with Matt on our Advisors Option show earlier this week. I know he likes his quote-unquote garbage puts in the S&P. He buys really, really small out-of-the-money puts, and he uses those as kind of tail risk players because they tend to pop when things happen. And we kind of talked about some of this upside as well, and he actually turns out he likes himself a lot of I think he said he had the SEP 120, something along those lines, in his back pocket as well. So these calls can kind of perform that same type of purpose if you're quick on the trigger finger. I'm curious for you, Mr. Meatball, have you ever employed this approach, and what are your thoughts on these kind of garbage calls, but in certain scenarios, they could actually work for you?
Yeah, I've never employed the strategy, but I kind of understand it, right? If you buy these garbage calls, market blows higher, vol explodes, you make some money. It also could be against like a credit portfolio or something like that will, to try and, reduce some of their upside exposure if vol absolutely does blow up. So my guess is there's some sort of hedging activity involved in these. They're not just going out and slinging way out of the money calls in VIX. But, I don't think it's a bad strategy.
Yeah, I think the closest analogy for longtime listeners of our show's listeners, those Tesla catastrophe puts we used to talk about a lot. They were the $1, the $10 puts in these ridiculous strikes. And if you listen to that show for a while, they actually gapped up quite a bit. There's a huge Vega component to those, and skew component that is outside of anything else. And they could actually move quite a bit. They increased in value substantially with not a huge change in the underlying out there, just a lot of sentiment change out there in Tesla. So something analogous could happen. I'm not advocating you come out and load up on 150s or even 120s. You have to be pretty savvy to know what you're doing and be quick on the trigger finger to get out of those at the right moment, unlike our friend on the XIV who's still kind of wearing those. But in general, it's an interesting idea. We were joking about them last week, but I want to disabuse you of the notion that if you have the 115s or 120s on, that you have to get all the way to 120 for those to make money. That is by no means the case. Let's get on out to a product that who knows what the hell's going on with this product right now. Mr. Meatball was alluding to it at the top of the show. This is VXX, a product everybody seems to love to crap on right now, which is, again, makes it an interesting time to launch new products in the space in the wake of all this drama that VXX is cooking up. What's it up to right now? It's a coin flip. Right now, coming into showtime, it was actually up about a quarter. It was at about 25.5. This thing has bounced all over the place willy-nilly ever since they announced that they are no longer issuing shares for this thing. We were hoping on our last show that maybe we would have some guidance on as to when they would start issuing new shares. Instead, we got doubling down on the nonsense drama in particular. As Meatball was alluding to, back in August of 2019, they were licensed. These notes are licensed to issue a certain amount of notes. And I think the total they were approved for was $20.8 billion, and they issued an additional $15.2 on top of that. So nearly doubling the amount they were approved to issue. So that in and of itself is troubling, because where were your risk controls there? The fact that it occurred in 2019 and nobody figured it out till just now, equally, if not more troubling. And then on top of that, the guy who oversaw that division, the chief risk guy, is now the CEO. So it's a triple whammy for if you already were a little bit dubious about Barclays and what they're doing with this product. This week certainly did not help. Mr. Meatball, what are your thoughts on the added drama that is going on in VXX? And have you washed your hands with this thing, or are you kind of just waiting and seeing?
No, I mean, they came out this week and said that they plan to refile so that they're able to issue shares, and that they are committed to the ETN space. That doesn't necessarily mean they're going to issue VXX. They definitely want to be able to put out oil as well. But, that was an interesting piece of news. I would have thought VXX would have seen that premium evaporate when that happened, and it did not. It is still trading at about 3-4 points. My guess is when they announce a date that they plan on being able to reissue shares, that you're going to see just a total evaporation of that weird premium to fair value in VXX.
A lot of people have been speccing on that day. There's been a lot of downside action out there thinking that once we got the news on VXX, all this juice, as you mentioned, would unwind, Mr. Meatball. That certainly seems to be the way the options are shaping up. Let's do a quick top 10 out here. Still 9-1 puts over calls. That's not that aberrant in VXX on a given week, but right now it's probably even more telling out there. Cost you 17,500 contracts to break into the top 10. That gets you to the 22 half puts expiring today. So unfortunately, those don't seem to be working out. A lot of people were betting on a very near-term reversion in this thing, and unfortunately, it seems like a lot of paper going the way of the dodo. Number 9, 20,000 of the April 17 half puts also going out today, so no joy for them. Number 8, 26,000 of the April 19 puts. Again, unfortunately, no joy for them. And we know, past as prologue listeners, that most of these were not sells. So these people were buying these puts, and unfortunately, it doesn't seem like it's going to work out. Number 7, 33,000 of the April 21 puts. They got a little bit more time. We shall see. Number 6, 34,000 of the April 20 puts. Number 5, back to the wasted money, 34,000 of the April 18 puts expiring today. So once again, no bueno there. Number 4, 40,000 of the April 18 puts. Again, we got a couple of ties here. We had 2, 5, and 6 are both 34,000, as well as 3 and 4 also about 40,000. 40,000 each for the April 18 puts and the April 16 half puts expiring today. So even more wasted money. A lot of broken hearts in the VXX put wing this week, unfortunately. Number 2, 45,000 of the April 30 calls. And number 1 out there, 74,000 of the May 18 put. So those obviously still have a chance of coming to fruition. Hopefully by May expiration, we'll have a little bit more, shall we say, insight into what's going on out there. Speaking of what's going on, we were just talking earlier this week, UVXY was getting perilously close to that level where they tend to start thinking about reverse splitting it. It was down in the 12 handle. Coming into today's show, it was at about 13.5. When we kicked off the show, it might have given some of that back now. Let's see if I can get it up here. There we go. Yeah, about 13.25. So it's giving up about a quarter of that. So it was 13.5, puts it down about 3/4 of a point. 13.25 is down about exactly a point from where it was on this time last show. In terms of action out there, let's do a quick top 5 out here. Number 5, we've got 1 call and 4 puts here. And number 5, 9,000 of the June 10 puts. So number 4, 11,000 of the April expiring next week on the 8th, 13 puts. Number 3, 11,300 of the June 70s. Back out to those fun strikes. Number 2, 12,000 of the June 20 puts. Those are looking pretty good. And number 1, 16,000 of the April expiring today, 12 half puts. Oh, wow, that hurts because those were in the money just a few sessions ago. Yeah, we were at 12.20 on Wednesday. Oh, that's why this product is so heartbreaking, listeners. You have all that on, 16,000 of these things. We were in the money. You were looking good. That's why, you got to get while the getting's good sometime in these products, listeners, because especially these days, you never know what's going to happen. You could start shelling a reactor again, and all the ball products are up 10 points, and all those puts are gone. So, yeah, when you have some juice on your, and obviously we don't know where they put these on for, but still. Wow, that's a rough one. Mr. Meatball, A, have you been slinging any UVXY this week? What are your thoughts on it? B, do you get a little bit dubious slinging UVXY when we start getting to this close to $10 level where things start to get a little wonky. And C, what are your thoughts on all these poor people who had the April 12-half puts expiring today and were winning until they were not?
Yeah, that's why you got to take profits when they come in UVXY. You buy puts, you make money, you move on, because UVXY is a heartbreaker. It can move. And again, UVIX is going to do even more. So that should be all kinds of fun. So again, just be aware and be on top and be ready.
Yeah, we're going to have to start expanding our rundown soon in the Vol Review, sir, to include the 2 new products. So that's always fun. Always fun to have some new products to break down here on the Vol Views show. Let's look really quickly at some volatility going on. Like we said, it's not officially earnings season right now. We're kind of in between the 2 major cycles. We usually break it down in terms of 6-week cycles, and that's how our reports run from over there at ORAT. So we're kind of between those right now. Still, there were some names popping off this week. We had Dave & Buster's on Monday, Micron on Tuesday, Chewy, easy for me to say, and Lululemon, as well as Five Below on Wednesday, and Walgreens and BlackBerry still kicking around there on Thursday. We got Walgreens Boots Alliance yesterday before the bell. Sit them really quickly. They're at 47.5 going into their announcement. They were pricing in 4.6%. They delivered 6%. So not a little bit of underperformance there from stock, outperformance there from a vol perspective. And the stock is down about $1 since then. So if you held it all the way through to the end of the week, you're looking even better out here, listeners. In terms of things that are popping off, we do have some names coming up this week still. Levi Strauss on the 6th, so all that jeans volatility. They're at about a 20.5 as of this report. They were pricing in $1.25. In the past, they moved to $1.06, so a little bit of extra jeans juice out there. And we have Stars, which is Constellation Brands. They were at they're on the 7th before the bell. They're at $2.33, pretty much even as of this report. They're pricing in about $8.40. In the past, they've moved about $8.28, so a little bit of extra juice, but not a heck of a lot there. And we also have pages and pages of more tickers. So even though earnings season proper is not kind of on right now, listen, we still have data for you over there at theoptionsinsider.com. Click on the Options News and Articles tab. If you do so, you can see how the 73 long straddles, the 60 short straddles, and the 102 calendars that they are tracking right now on their earnings trades report, how they're all working out. Interesting stuff. Speaking of interesting stuff, it is time to get to your interesting questions. It is time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, let's get to it. Let's start off. We asked you folks at beginning of the week, actually. I just mentioned at the top of the show, all the drama over VXX has us wondering which volatility product implosion or failure has had the greatest impact on the overall vol market. Gave you 4 choices. The great SVXY neutering of 2018, the death of XIV also in 2018, the TVIX unwinding/disaster of 2012, or the ongoing drama of VXX right now. Mr. Meatball, what is your vote? And more importantly, what do you think our audience is voting for, sir?
Oh, I'm going to say the VXX drama.
Really? You think that's winning? Interesting. Okay. And that's for both? You think the audience is voting for that too?
Yes.
All right. Well, right now it is actually the death of XIV running away with it. 69%, sir. I kind of thought that was certainly, in my mind, one of the more impactful vol events we've had in quite some time. We're still kind of dealing with the repercussions, hence the products that launched this week. We're still living in a post-XIV world in many respects. Followed by number 2, the distant number 2, the ongoing VXX drama, 17.2%. The TVIX disaster of 2012, 10.3%, and the great SVXY neutering, 3.4%. And getting back to what I was saying before, I think I want to do a more official poll for the whole week next week. But Mr. Meatball, we did a flash poll a few minutes ago here during the show. It's going to expire at the end of the show. We asked our audience right now, are you going to trade the new vol products, SVIX and UVIX? Made it very simple, yes or no. What do you think our audience is voting for, sir?
Yes.
I remember I said I thought this would be divisive. It is exactly 50-50, yes and no right now. Wow.
Oh, wow.
That is actually kind of what I expected. There is still a lot of resentment after XIV annihilated a lot of people's accounts. They're kind of angry at that inverse vol space. So it doesn't surprise me that there's a little bit of trepidation out there. Again, this is just a kind of quick flash poll. We'll probably do it in a more official form next week because these are interesting products. I want to get your thoughts on these. But wow, yeah. That's it. Oh, we have David Neff chiming in. Says, how about I have to understand how it works category. All right, maybe for next week's official poll, David, we will add that. I don't understand how any of these products work. That's not a bad idea, actually. All right, let's get on out to this. Poor Travis has been waiting for a while. He sent this in a while ago. Let's get to Travis's question. Travis Mock, he says, I have 2 questions for the Vol crew. Number 1. Good thing you're on, Mr. Meatball. He mentions you here. He says, I've often heard Mark Sebastian say that the underlying for VIX options is the corresponding VIX future. But is the answer more nuanced than that? As far as I know, although the VIX futures provide a useful reference, VIX options are at all times priced off of the SPX options, not the futures. For example, there are VIX weekly options that expire after the expiry of the corresponding month's VIX future. Are those weekly VIX options simply priced off the corresponding weekly SPX options? You got a second one here. They're both kind of long. So let's do the first one first, Mr. Meatball. What do you have to say for Travis, who's been waiting patiently for his question about what are VIX options actually priced off of, sir?
All right. Well, so VIX options are technically priced off of, you're right, SPX, the future value of SPX options, but so is the future. And the future and the options actually expire at the same time into the same thing. There are weekly futures that actually correspond with those weekly options, and they all expire at the same time. And so when I say that the underlying for the VIX options is the VIX future, the reason I say it and put it that way is because if you're trying to track how the options are moving, how they're interacting as VIX moves, the VIX futures are where you're going to look. And up until actual expiration, the VIX futures are the product that is used to hedge off all that risk in VIX, similar to SPX, right? SPX, the underlying is not the S&P future. Mark, you traded S&P. Is not the S&P future. It's the cash value of the S&P 500 index. But so is the future. So when futures expire on the quarterlies, they expire into the exact same thing as the SPX. So if I'm long an in-the-money call in SPX and short the equivalent of 2 E-minis against it, that just expires into nothing. The same thing occurs with VIX. So if I'm long a VIX, 10 VIX in-the-money calls, and short 1 future against it, that position expires into nothingness. And that is why I put it that way. So is it more nuanced? Yes, but for practical purposes, the VIX future is the underlying for the VIX index options that we see trade.
Yeah, it's a bit of a distinction without much of a difference, except for a very small window of time, really. So you're technically right, but it's not really going to matter much. Let's get to, since you waited so patiently, I'll let you do 2, Travis. Travis says, I know that due to the unusual way that VIX options are priced, the VIX Greeks and implied volatility on most retail accessible trading platforms are completely wrong. We have lamented about this in the past, yes. He says, I understand that LiveVol gets it right. Does anyone else? In your view, how important is it to have accurate Greek/implied volatility when trading VIX? I trade mostly SPX and equity options and rely on accurate Greeks and implied vols, but I get the feeling, that many VIX traders are more, shall we say, improvisational. I like that. I think there certainly are a cadre of VIX traders who are like, I think on a whim, I think vol is going to be popping off. I'm going to buy some 25 calls. I think there certainly is that audience out there, but there are also the nuanced folks too. Mr. Meatball, this is something you've kind of railed against for a long time, ever since we started doing this show, how most brokers outside of LiveVol, he mentions them, they have kind of done it pretty well. Outside of LiveVol, don't really get it right. Have you amended that? Have you found any others that you approve of now?
So even TD, who absolutely refused to do it, has now made it so that you can adjust to get the VIX future as the underlying price. And if you're trading SPX on some of these ones, you're also getting inaccurate Greeks, because one thing to be aware of is the underlying for the SPX is not the SPX. All right. The underlying for SPX index options is not SPX. It is the forward value of SPX. So believe it or not, when you take into account the interest and dividends and pieces of that, especially if you go far out, now that interest rates are coming back into play, if we see interest rates get to 3%, this is going to have a profound impact on your Greeks in options with more than 6 months to expire. A lot of the brokerage platforms use the SPX cash index as its underlying. It's not. It's the forward value. Go out to January 2023 or January 2024 and do and execute a combo there and see where that price is SPX. And the answer is it is not going to be where the cash index is trading. What do I mean by that? All right, well, let's take a look at December 2025. All right, the 4,500 combo. All right, the 4,500 combo that is $500 in the money. Let me give you that collar synthetic. The combo is pricing itself $268.35. That means that the forward value of the SPX out to December 2025 is $4,700 and what? $4,770.
Yeah, 68. Yeah.
All right. So it's a full 200 points above that $4,500 level. So your Greeks are wrong. So if I pull up in TD, for instance, the delta gamma of those options, their Greeks are not going to be exactly correct. And that is because, so they've got the 4,500s as a 60 delta. They're not. They're $200 out of the money. Those are about a 50 delta, maybe a 40, maybe even under 50. So the not using the right underlying is extremely important. Yes, I've not dropped my anger at this.
I just had flashbacks when you were saying that to all the brokers out in the front of the S used to quote combos all the time. And it was always so nerve-wracking because you're effectively making markets on the futures at that point, right? And it was just, you could make or lose a ton. It was crazy. Those are some of the high times. And I'll remember all the listeners who asked for that all SPX Q&A day. I think we are going to do that sometimes coming up. So maybe we'll get into some of those combo tails and other sorts of fun stuff. Because, yeah, they trade things a little bit differently out there. But great questions, Travis. Looks like they actually let's go really quickly. I want to squeeze more people in. I'm so nice today. Let's go to Norman. He's also been waiting for a while. Norman, what is your view of Bitcoin as a volatility trading product? It has much higher sustained volatility than SPX and seems to have a relatively established skew setup that is opposite to that of most equities. Can we expect to see Bitcoin vol products trading sometime in the future? Well, the answer to that last question is actually, it's kind of happening now. In fact, our buddy, Mr. Simon Ho, who's on the show a lot, the creator of Spikes, he has also created other products, including BitVol, which is using kind of that Spikes methodology to calculate what is effectively a Bitcoin VIX or a Bitcoin Spikes. And that has actually put up some trades, actually some OTC pension fund. He just sent me a thing recently. A pension fund came in and traded OTC 1 month BitVol vertical. So it is trading. Technically, it's all OTC. You can't really trade it as a retail trader, but it does exist. It's called BitVol, and it is trading technically. So that part of your question is happening right now, and it does exist. But yeah, it's an interesting question about Bitcoin as a vol product. It has this reputation as being super volatile, and yet if you listen to our Crypto Rundown show, you know that vol right now is in about the mid to low 60s. So it's more like a decently volatile equity than it is blowing your doors off out there, not even in triple digits or close to it right now. And it does have an interesting skew setup that has evolved a little bit as well. We have talked about this a lot. I have talked about this a lot on Crypto Rundown. So let's get Mark's thoughts on this. Mr. Meeple, I know you've been toying more with all things crypto and Bitcoin. What are your thoughts of Bitcoin, as he puts it, a vol product with a relatively established skew setup that is opposite to that of most equities, sir?
Well, I think this would be a good question to ask Greg. who runs Genesis Volatility, who absolutely all they do is analytics on Bitcoin options. But I don't think Bitcoin really runs opposite of equity vol. I think this person is wrong in that respect, because Bitcoin vol explodes when Bitcoin go. It's more like gold than it is like equities, but Bitcoin tends to correlate a little too much to the S&P 500 for those that consider it a store of wealth or something like that. It has tended to sell off with the S&P, and so its vol goes up then. And then on the upside, like gold, when it starts to explode higher, you also see vol. So I would say that a Bitcoin vol future is going to trade a lot more like gold vol or silver vol or even oil vol than kind of something that trades opposite of vol in the S&P 500.
Funny you should mention Greg. He is coming on a Crypto Rundown on Monday, so perhaps we shall discuss that. He's a big fan of talking skew for days in Bitcoin. So
yes, he is.
We could certainly get into that more on the Crypto Rundown. Now it is time for us to get into the final segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, let's do it. Crystal ball time. And let's see here. We actually had some pretty prescient analysis last week. Tom was looking pretty good at 21 until he wasn't. We got up to about, looks like 2080, not too long ago, halfway through the show. So he was looking pretty good. The Rock Lobster was at a 1989 in VIX and a 2089 in Spikes. So he's looking, let's see, by the way, Spikes right now, VIX at almost about 2040, Spikes at about a 2120. So he's not looking that bad on the Spikes front. So I might have to give it to the Rock Lobster on the Spikes side. I was at about a 2469, so I was a wee bit too high this week. So it's kind of a close fight between Tom, who's about 0.6 away on VIX. Actually, he's on Spikes as well. So he's about 0.19 away. So it's like we got to give it to Tom. He snuck in there on the Rock Lobster. Impressive work, Tom from MyAx. It is his product at the end of the day, so maybe he should have some insight into it. But Mr. Meatball, that means I lost last week, so I will allow you to go first. What are you feeling for this time next week, sir?
Oh, next week feels like it could be a down week. We're about 2040.
So you got about a 12 in you, 12 and a half maybe?
Yeah, I don't know. I mean, not for VIX. I'm thinking an up week for VIX.
Oh, okay. I thought you were saying a 12 and a half.
I'm going to say 22-22.
22-22 for the greasy. An odd not betting your book, just straight up vol prognostication from the Meatball. Don't get a lot of those. All right, so 22-22 for the Meatball. And then, yeah, I've been kind of playing a little bit more vol game for a while. I'm going to hang out in that game as well because I don't think we're done with this by a long shot. Obviously, I've been getting forced by the market to drag myself down week after week. I was at 24.69. I don't hate that this week. I'm going to say a little lower though. I'm going to say 24.15. All right, there's your market this week, listeners. 22.22 on the dark side, and the accurate prediction 24.15 on the upside. All right, everybody. That music means we come to the end of another volatility journey. What a fun journey we had this week. Some new products to potentially add into the mix. So that should be fun going forward. I look forward to all that, fun guests, a whole bunch of more stuff coming up for you on future episodes of Vol Views. But Mr. Meatball, if they want to reach out to you, if they have understandable questions about these new products, where should they go? What should they do?
Go to optionpit.com. That is where we are. That is where I'm writing my VIX Edge blog every day. It got all kinds of insight into what's going on in VXX, SVIX, UVXY, UVIX, regular VIX options, what we're seeing there, flow, you name it. So if you're a VIX trader and you're not reading my blog every day, you're missing out because I'm going to be adding some value to your tradings. Go to optionpit.com and read that VIX Edge blog.
Check it out, optionpit.com. We have a listener saying they miss Kenny Loggins, so they're going to go for 25.01. Yeah, I'm with you. I miss our guest star, the Loggins, as well. So who knows? Maybe he'll make a repeat appearance this time next week. In the meantime, of course, you know where to go to learn about all things spikes, the options, all the other stuff, including get access to the shift search, get access to Quick Strike. Now they have Quick Strike. on equities. How cool is that? You can get the quick skew, all that cool stuff we talk about on the futures options all the time on TWIFO. You can now do it with the equities. You can also get a link to a cool show called Vol Views. What more do you need? MyAxOptions.com/spikes is the place to go to learn more. We got to get on out of here, but don't worry. For all you Secret Club kids, just hang out for a little bit. We'll pump some fun stuff into the live. We'll be back in a little less than an hour now to break down the unruly week of unusual options activity. Do we have some trades to talk about this week? Yeah, I think we do. Brock Lobster was hitting me up, telling me all the things he was taking off and putting on, so we have a lot of stuff to talk about this week. Unfortunately, for all you on-demand folks, that does conclude our broadcast week. For you folks, I want to thank you for joining us all week, and we'll see you back here next week, another episode of Volatility Views.
Volatility Views is brought to you by MyAx, one of the fastest, most efficient trading platforms in the world. MyAx is proud to bring you SPIKES Volatility products. SPIKES options and futures are traded on the SPIKES Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.